Brazil, I was with HSBC Mutual Fund, Global Mutual Fund, where we used to invest not only in India but across the globe. So I've been a lot of exposure to the US market, to the Western markets, Europe specifically, and to the Chinese market as well. So 4 5 years of my life I was into Indian market, where I was covering in pharmaceutical, automobile sectors in India, Indian stock market. And then 2 years in Brazil, I was working covering the entire global market. So it's been a long journey, around 7 years into research and 2 years into maybe advisory types. Would not say a sales job, but an advisory job. So I turned myself, from being an advisor to being an analyst. Though the journey was tough, as you all also have faced this problem, being an analyst, uh, equity research analyst. I get a lot of queries, a lot of inquiries. Do you have any openings, or do you have anything that can get into equity research? I'm trying hard. Even CA, CFAs at times, it becomes difficult for them to enter into research. But hopefully I made it into research. And the same issue I thought with students, that stock market has been something that everyone should understand. It's about personal finance also. Forget about jobs, but it's also about personal finance. You need to know where to invest your money and how to invest. So for that, I was working with few fund managers, interacted, make reports, make financial models. Then after that, finding this issue that students are not getting into equity research just because of lacking few terminologies, or maybe lacking financial knowledge. What I say, see, we have learned, the students are from accounting background. We have learned accounts, but account is way more different than finance. Though it is related, but it is way more different than accounts. So what that is the problem. I have seen CAs, my friends, they are into accounting field. They say that I want to go into finance, but somehow they are not able to get it because of experience, less experience, or maybe because of not understanding the concept, maybe the valuation part. No, the base. Now this is there in CA, but it is more advanced level into CFAs and maybe into MBA finance. So CAs find it difficult to enter into research who are into accounting background. Apart from the accounting background, engineers, science background people, some of them crack because of your higher MBA colleges, elite colleges, only the Ivy League or maybe the top 10 colleges in India, you get direct entry into equity research. That is investment banking, rather. Rest all are find it difficult to get into finance. Now, there was one topic which, since I've told that deferred tax assets and deferred tax liabilities, it is there on the balance sheet, but the problem is that we are not able to understand what is it. How does that impacts our valuation, or how is that impacts our cash flows? Now we talk about DCF. You must also have learned about DCFs and all, discounted cash flow valuation, but you don't know what is the impact on the balance sheet. So there was one topic which I came across, found it interesting to tell. Even when I teach financial modeling, I find the issue that people don't understand. Even after making a model, you must have seen a lot of people who are making financial models on LinkedIn, but they don't crack research jobs. They don't crack investment banking jobs. I would rather say that. The reason is that few of these concepts that are not known. So it's a part of CFA. I will share my screen. So it's a blank Excel, and I will share the CFA curriculum as well. Okay, this is one of the books. Okay, let's show the books. Now, when you read it, the problem is that this is told in such a difficult way. The one is the CFA books, and one of the PDFs, and then this is your. Here, the words are too difficult to understand at times. I have seen, I even teach CFA level 1 to students online, but I have seen that reading any book, becomes very difficult to understand what they are actually written. Specifically, okay, a person from accounts background might understand, but I have seen, even I was from a BCom background, I didn't understand what was it. When I read it first, I skipped it all together. Now, doing that into research, and when you go, you need to know what all things are there on the balance sheet. See, I have a model made. Now, there are so many things on a balance sheet. So many things are balance sheet. Obviously, everything is not important from valuation perspective, but things that impact cash are always important. Things that impact cash is always important. Now here you see a deferred tax item over here, but no one knows what is it. Income tax. This is one of the deferred tax item. There is income tax assets over here, and there is income tax liability. What to do with this? We ignore it. We ignore it. But when the number is small, it's fine. But what happens when the number is big? And ideally, you should know this. When you go for interviews, they ask you what is deferred tax asset. How will it impact your valuation? We have no idea. Why? Because we have learned only about FCFF. And FCFF, if you know the formula, is what? You know that many of you must be knowing the formula for FCFF. Yeah, I'll show you my valuation over here. This is the model which is made, you know, this one. Okay. Discounted cash flow. Different ways of finding FCFF. EBITDA, you find it from EBITDA, you find it from net income. You just know this. You don't know that impact of what happens when there's a lot of deferred tax assets or a liability. Okay. Now let me create a normal balance sheet, or a normal P&L account. Sales, COGS, you have a gross profit. Gross profit. If you have any doubt, you can raise your hand. I've kept everyone mute to avoid the disturbance. You can raise your hand. I can unmute you. Gross profit and operating expenses. Then it comes EBITDA. Yeah, let's add this. I will take employee expense as per the India is. Okay, India is reporting employee expense, and then there is your other expenses. Then it is EBITDA. Then it comes depreciation. Then it comes EBIT. It is then your interest, EBT, your tax, the tax rate, and your profit after tax. Okay. Now this is not a format. Those who don't understand, I have seen many students they said I don't understand this format. It is not a format. I have just added few things and I've started with sales and subtracted all my expenses. That's it. Nothing else. This other thing was something called other income over here. Other income. Okay. It's like random numbers, very simple numbers. I did a sales of let's say 1 lakh, sorry, 10 lakhs. Then my cost was let's say 4 lakhs. My gross profit would have been 6 lakhs. If the employee expense was more 1 lakh, other expenses were 2 lakhs. 50,000. This is 50,000. Okay. So gross profit, employee. Okay, depreciation I take 1 lakh. EBT, interest also I take 1 lakh just to keep things simple. Other income I take 0 as of now. EBIT minus interest plus other income, and then the tax rate, that is 30%. Okay, this I have made. This is a part of financial models. Okay, you see, I have bold this thing. This is the way. I have not done it purposely. This is how you model, because here when I drag it along, I know that these numbers are calculated. This number is coming from a calculation, part of financial modeling. And then your EBIT is again here. Now why I wrote this like this, and I just change it to 40, it changes to 50, it changes. Okay. Now when reporting, other income comes before PAT. It doesn't come after PAT. Comes before PAT. So now there are two types of reporting. One is your income, or maybe I'll say profit and loss statement. This is your profit and loss statement for financial purpose, okay, for financial purpose. And the second one is for your profit and loss statement for your tax purpose. Now there are two ways of reporting this. This tax reporting we never get. As an investor, we never get this tax report. This is only with the CS. Okay. Now, same way in the model, this what we find, this statement is all about our financial reporting. Okay. That we get on the annual report. This is all annual report number. Okay. And if you tell, see, I have brought this into one format, but if I go back, this is how the raw data looks like. It's all scattered. It's all scattered. And if you see other income, comes over here. Shivani, other income comes up right away. It is not after tax. This is the annual numbers from the results. This is how the data get, and I have formatted it in a much better way to understand. Whatever, what is the margins, what is the profitability, growth, EBITDA margins, etc. Now this is what is our this report, okay, financial reporting for financial purpose. Now this is for tax reporting. The same thing is, let us say I copy it over here, same thing. But now if you have learned a concept called straight line depreciation and a double declining depreciation. These concepts are we have learned in commerce. Straight line, now depreciation is when your value of your asset gets reduced. Okay. Now in finance, for few products, specified products, the depreciation is specified, but you can change it for financial purpose. Tax purpose usually it is fixed. Okay, it is fixed. But on the P&L statement over here, you can do anything because as per accounting standards, it depends on product to product which depreciation you can charge. But it depends on you on a company to company wise basis on what are they charging, what are the depreciation they are charging. So what happens? Let us say, how did this 1 lakh come? Okay, how did this 1 lakh come? I would have said that I have an asset. Put it over here. The schedules look like that. Opening balance, then your add capex, then less depreciation, and then is your net asset. Okay. Net asset or net PP, nowadays you see it's the form of PP on the balance sheet. Now it works like that. Okay. Opening balance. Okay, I say it was 9 lakhs. Okay. Asset sold. Okay. Usually now for finance, asset sold is taken is not taken. You don't assume that asset is sold. Okay, sold. 9 lakh. I add a capex of 1 lakh. Okay. So my total assets are worth 10 lakhs, and I use a 10% rate on it. Sold I assume 0. My depreciation is 9 plus 1 into the 10%. Okay. Is what 1 lakh is my depreciation, and then opening plus addition minus sold minus depreciation. This is all my net asset value. This is what is reflected on the balance sheet. And this depreciation, 1 lakh depreciation is what is reflected over here. Now this is for financial purpose. And now these words are given in finance topics. That is like this is called an carrying value. Carrying value. Now only diagrams used in finance is just the net asset value, but it is used the carrying value. Now same way how you make it for P&L for finance for financial purpose, same way you make it for your tax purpose as well. Okay, but here in tax purpose you can change the depreciation rate, or it has been allowed. At some cases it is allowed. So what you do is And this is called double declining. So I just do it twice. I just do it twice. So what happens is now you see my depreciation over here increased. My depreciation over here increased for tax reporting. This was for my financial reporting. This was for my tax reporting. So here what happened now? You see on the tax reporting purpose, you see a depreciation. Now I just link it over here. Now you see the difference in the tax paid. I paid 90,000. I have to pay how much? 90,000, right? I have to pay tax, which was 90,000, but I paid how much? 60,000. Sorry, I forgot to tell you that this is carrying value. Now this, it is just called a tax base. It is nothing but a tax base. This is called carrying value. This is called the tax base. For tax reporting purpose, you call tax base. For financial reporting, you call carrying value. We can use any other method in accounting. So accounting, it depends on company to company. Any method you can use. I'm just assuming that this company has used a straight line, and for tax reporting, they are using double declining. Okay. Now, what happens is, this year one, this year one. Now, always when you talk about finance, it should always think about the P&L statement, because this is the actual that you report. This is as per tax. Tax guys can take some expenses, or they can say that this expense is allowed or this expense is not allowed. They can allow or disallow your expenses. But the financial reporting purpose, expense is an expense. It's on a accrual basis. If you know, account is on accrual basis. 1 lakh sales, 10 lakhs sales doesn't mean that that you have done 10 lakhs of sales. For tax reporting purpose, it might happen that you have not received 10 lakhs. You might have only received 8 lakhs. But for P&L purpose, you say that it is 10 lakhs and you have paid, and your tax liability is around 90,000. As per the books, as per your financials, the tax reporting is around 90,000. But how much did you pay? How much did you pay? Your tax liability was tax liability was 90,000, but tax paid was only 60,000. This difference. So this difference, see, ideally, what was your tax liability? 90,000. You paid how much? 60,000. Now, you had to pay higher, but you paid. So this was the tax outflow. This was the cash outflow, but you actually, it was 90,000 that you have to pay, but you only paid 60,000. Wouldn't it impact your tax position or cash position on your balance sheet? Wouldn't it impact? Now, what is that remaining? What is the difference? What is the difference? For you, what is it? An asset or a liability? For you, what is it? An asset or a liability? Or maybe a source or an application? 30,000 you have not paid. But does it belong to you? Does it belong to you? See, the guys who are replying assets and liabilities, assets, the problem is, I will not say, whenever I teach now, I don't say assets or application. I always say sources of funds and application of funds. You know why? Because the assets and liability concept is usually more complicated one. And I've seen this now. I thought, see, sources of fund means the money that you have. Application of fund means the money that you have spent. On cars. What is assets? Cars, gold, investments. Those are assets, right? You spent on assets. You spend on your assets. So it is always application. So whenever you pay to have something on your books, it's called your asset. Or is it an expense? If you derive future value from it, it is called an asset. Or if you spend, so it is always the spending. Here, have you spent? You haven't spent. It is still with you. So this is called to be your deferred tax, deferred tax liability. Okay, now deferred tax, and I will write it DTL. DTL. Okay, DTL. What is your deferred tax liability? Is 30,000 is your deferred tax liability. Now, if I ask you from an analyst point of view, good or bad? Good or bad? You should have this or you should not have this. Is it advisable to have a deferred tax liability? See, now whenever I say, rather than saying good and bad, whenever I say it's a liability, is it good? Irrespective of the situation, irrespective of the situation. Asha, one thing I would like to tell, never answer in an interview like it depends. Because whenever an interviewer asks you a question, you assume it and tell him. In the absence of information, a liability is always bad. Because depends will create a lot of questions again. It creates a lot of questions again. Don't complicate things. Even I take interviews now. If I tell someone that it depends, it's not a good way to answer. Okay, in an interview, it's not a good way to answer that it depends. In absence of information, having a liability is always bad. Am I right? Whatever be the reason, having debt is good. I will say it depends that you have to grow or not. Having debt is good. No, right? Now, so keep it simple. Don't complicate things in life. Keep things simple. Finance is also to be kept simple. Accounts is complicated. We have learned accounts in a complicated way. So we will not use this, in whatever you have learned till now, everyone knows liability is bad. Obviously, when it's a liability, it's bad. Now, why it is bad? Because you have to pay this cash in future. This is not your cash. This is not your cash. You have to pay this in future. Now, whenever you talk about deferred tax liabilities, it is always what you compare. You compare your financial statement. You compare your financial statement. Okay. Always you compare your financial statement first, and then go to the income tax report. Now, obviously, you don't get this, but you should know how it is created. How was deferred tax liability created? Okay, this is first thing. Now, what happens? See, though I have taken a 20% depreciation for tax base, so I will come to it why this is allowed. It doesn't have any impact whether you take for double declining or whether you pay straight line. At the end of the year, you will pay the same tax and liability. You will pay the same tax expense. It is just the timings are different. It is just the timings are different. Now, I'll just get you one thing. Just increase my depreciation, okay? Just to keep things simple. I took an asset worth rupees, let's say, okay, 10 lakhs, okay, same. I took an asset worth rupees 10 lakhs, and my useful life was 5 years. My useful life was 5 years. Gross block, and my useful life was 5 years. So now, as per straight line depreciation, my depreciation will be 10 lakhs divided by 5. 10 lakhs divided by 5. This is my straight line depreciation. So what I will do is, this is my straight line depreciation. Okay, I will just use it down and I will make a cash statement over here. Okay, assuming gross block, straight line, and net value. Okay, net PP. 10. Okay, I will also take an opening. Since it was my first year, I will keep opening balance 0. Opening balance 0. Okay. So 0 plus 1 lakh minus this. This is my 8 lakh is my opening sorry, net PP for first year. Now obviously I will use it for 5 years. To show that difference. Straight lines of 2 lakh will be same for next 1, 2, 3, 4, 5 years. Okay. 0. Then this is how it works. It works at the end. Your asset life will be, because at the end of 5 years you will sell off your assets. At the end of 5 years you will sell off your assets. Okay. This is straight line method. Okay, based on straight line method. Now you said why it is different, why it is allowed. It's not allowed. It is just way of reporting to save taxes, and accounts have done it. Save how to now? What will be double declining? What will be double declining? Double declining is same way. Opening is 0. Gross block 10 lakhs. Now here, what will be the depreciation? So it's always useful life. Useful life, that is 5 years. Or I will say the depreciation will be twice. Depreciation will be twice of it. That is 4 lakh. Yeah, we are not saving taxes. We are just postponing. I will let you know how do you save it and how it is, how you use the deferred tax as a deferred tax liability for your advantage. So it is direct 2 times. Now 2 times is usually said to be, I divide the useful life. What I do is I divide the useful life by 2. Or I do it, if I say, useful life is 5%, so what will be a depreciation rate? And this also, if a useful life is 5 years, depreciation rate is 1 divided by 5. That is 20%. That is 20%. And same way the double declining depreciation, it works 2 into the depreciation rate. That is 40% is your double declining rate. It works like that. Okay. 40% it works like that. 2 into the 20% rate. Okay. All now, or the second way in CFA it is told like this. CFA, what you do in CFA, now there is way of writing. In useful life, now what you do, you divide the useful life by 2. You divide your useful life by 2. 2 way of doing it, one and the same. Okay, one and the same. Now it is flat 40%, not flat, but other WDV method. So it will be 40% opening. 6 lakhs goes over here. It is 0. Now this 40% will be constant. 40% will be constant. And now which? Now see, it is on the value. Okay, it is on this value. Now see this has also a useful life of 5 years. But what happens over here at the last? See how much I have paid till now. Sum. If I do this sum, till now I have paid 8,70,000. And here now at the end, what will be your depreciation? Here, how much I have paid? 1 lakh. Total 1 lakh. Here I have paid only 10 lakh, right? Total amount 10 lakh I have paid over here. 8,70,000 I have paid over here. But what about that difference? Now in the last year, all your depreciation will be same like this one. Will be same like this one. And then when you do it, it should ideally match with the 1 lakh. Okay. This is how it works. Now, there's also a CFA concept that they tell you to find the depreciation for the last year. What we do? What we do? We just do this way. This is not the way of finding depreciation. Okay. At the end, whatever value is, because you will sell off this asset. You will sell off this asset. So at the end, your depreciation is same because you will spend 5 lakhs for the entire year. Only the amount is different. You see, 4 lakhs spent, year 2 lakhs spent. Year 2 year is same, here it is again high. And here it starts going down. Here it is starts going down. So this is how it is, just deferment. That is why it is called deferred. Your expenses are just deferred. That is the reason of deferred tax assets, deferred tax liabilities. That is what. So you defer your assets, you defer your tax payment. Now, if you say depend, now when you say it depends, defer your tax payment. Now it is a good sign for me that I have deferred the payment and I can use it for my personal growth. Okay, now that depends. Okay, means I have sources, means I have more source, so I can use that cash anywhere I want it. Which method? Double declaring is itself a method, see. It's itself a method. So in double declaring, you use the WDV method, return down value. We don't take straight away. Here we have take straight depreciation. Here we do as a based on WDV, 40% for each year. 40% for each, and then you subtract the value. Okay. Here we use straight. It is straight, and this is a part of double declining is a part of WDV. Okay. But at the end, your value will be 0. Both the ways you spend same only amount. Now, this is account. This has been complicated things. That is why we learn. We spend so much of money learning account and finance. Okay. Now this is now when you are a businessman, you will understand the benefit of this thing. Since now we are not into business, we don't understand what is the benefit of this. But when you start be an entrepreneur, you need to know. My father knows all this thing now. He's an engineer, but he knows all these things better than me at times. He's a Rishabh, how to save taxes. This is how you save taxes. Now this is how you defer your taxes. This is how you defer your taxes. Let's say you don't want to pay taxes. You want to buy something. You want to expand your business. You keep on deferring your expenses. Now, obviously, it will come at some point in time. But at least you have that much of money saved. And just link this is equal to the with my straight line. Okay. And then I link this to my this depreciation. I'll link it with my this one. Okay. Fine. Okay, now it has become 0. What I will do is decrease some of my expense to at least have some. It was 2 lakhs. Okay. Okay. Now what is the difference? Now the difference has increased to 60,000. See, okay, the difference has increased to 60,000. Now what is the deferred tax liability? I will write over here deferred tax liabilities. I can directly also write it taxes paid. Sorry, taxes to be paid and the actual taxes paid. That is 60,000. So I get a deferred tax liability. The next year what will happen? Just count it. Just drag it to the next year. Assuming the this is same. Assuming your sales are same. Always depreciation here the tax liability will be same. But what happens over here now? What happens over here is here depreciation is changing since I have linked it. Okay, since I have linked it, my depreciation changed. Okay. Now what is your deferred tax liabilities created over here now? Next year, the tax liability was 1,20,000. Taxes paid were 108. Again, is a liability created? 12,000 you have to pay now. So the total created till now, 60,000 you have to pay and 12,000 you have to pay now. I mean, you have to pay late this year. So it gets accumulated because it's a balance sheet item. It gets accumulated. So now it is 72,000 that you have liability. Okay. 72,000 is now your liability for the next year. So this is how it gets increased. This is how you get increased. You see over here on the financial statement, the liabilities usually keeps on increasing. It usually keeps on increasing. You know what happened in 2020? Usually increases only. If you are doing business, if you are doing business, it will increase only, ideally, because it is a continuous process. Every time if you use a double declining method, and this is actually a better way of doing it, because you defer your tax outflow. You defer your tax outflow. Now let's go to the third year. Okay, let's go to the year 3. Let's go to year 3. Now, see, I've linked it. Now what is it? Now I got a negative sign. Means I have to pay how much? 1,20,000. How much I paid? 1,36,000. Paid 1,36,000. So my liabilities. It can say that I have created a deferred tax assets now. I have created a deferred tax assets, that is 16,800 is a deferred tax asset that I have created. So now ideally, if you want to pay your expenses on income tax, let us say you assume that you have to pay all your expenses today. Let's say you have to pay all your expenses today. So now you get, ideally how much you have to pay from last year? 72,000 was yet to pay. But now if you decide to pay all your expenses today, your income tax expense would have been 1,20,000 that you have to pay. Okay. 72,000 from last year, and this you got a credit this year. You don't have to pay total, you have to pay only 1,72,000 because this is all you have to pay. Let us assume that you have to pay it all in this year. Assuming you pay all your expenses in this year. So you pay it this way. 1,20,000 plus the deferred tax liabilities, and then okay, this is your income tax expense. Or you can say, okay, if you talk about per year, let's say only for this year, you got this rebate. Okay, you got this rebate, and from last year there was a difference. Last year there was only 12,000 last year. Additionally, you have to pay, and you assume that you have to pay off, and now you got a rebate of 16,000. Means ideally you got a rebate of 14,800. And what was the income tax expense this year? If you ideally want to pay your taxes, you only pay 1,15,000 because this is a rebate, or maybe an additional tax you have paid. You got a rebate. Okay. The main purpose over here, how a deferred tax liability and deferred tax assets created. This is created, and after that, it starts declining. It starts declining. The asset starts creating, and then that income tax paid is calculated in your sheet when you go to modeling. Here now I have seen students saying that, sir, why is the tax amount paid is different over here and in the P&L statement? See, what was the amount? It was 784. Why it is different over here and why it is different over here? Here it is 729. Why is it different? There it was 784. It is 729. Why? Now you tell me why what would be that different? 784 and 729. Debate. What would have been the difference? Here it was 729. There it is showing it is 784. Tax outflow was 784. No, outflow was higher, no? Outflow was higher. or I would say that there was something deferred tax liabilities would have been there from last year that they have to pay. Say this year, 12,000. There was a liability this year that you have to pay. It might happen that this, let's say 1,20,000 and 1,20,000 matches for tax and this purpose, tax and your financial purpose. Let us say it matches. Then you have to pay 1,20,000 plus the difference of last year. So it always gets on accumulated. Always gets on accumulated, and you pay the difference. So income tax expense, if you calculate what is your income tax expense, is your income tax payable. Income tax payable. Now, what is the income tax payable? Here, this one, the tax reporting part. The income tax payable for this year was 1,36,800. Okay, but how much you have got? This was your expense, change in deferred tax assets and deferred tax liability. So this additional you have to pay. When that tax outflow, this might be the reason that from last year you have to pay that liability this year. So 1,36,800 plus 12,000 is what your actual would have been a cash outflow. And then the PNL is how much? Is 1,20,000 only. But here you see an additional amount. Okay. So in modeling, you need to understand. I have seen students asking me, sir, why it is different? Why is it different? That is the reason it is different. Because the liabilities get on added. What if it had a lot of deferred tax assets? Okay, this deferred tax asset. Okay. Now see, it had a deferred tax assets of 856. 856 in 19, and suddenly it became FY20. It became 32. 332. 322. Tax paid year was, see, 553. And income tax was 952. Cash outflow was only 553. No, this is 400 crore of saving. These are numbers in crores. Just imagine 400 crores of saving. This actually impacts your valuation or actually impact your cash position. Do you have to take loans or not? That depends on this amount. Okay. This is how the practical aspects work in this. Now let's say we'll go ahead. Let us say 3 years, 3, 4, 5. Okay, I will do it for 5 years. 3, 4, and 5. There also I will do the same thing. 3, 4, 5. $70,000 you have to pay. Okay. Now you got a rebate. Now here also, again, deferred tax paid was 1,54,000. But you had to pay how much? 1,20,000. So you paid 34,000 extra. Same way over here. How much you paid? 21,000 extra. If you see, the sum comes to deferred tax assets. Total deferred tax assets. Add this. Tally. Total deferred tax liabilities and deferred tax assets. So you will pay these taxes somewhere down, but it's just deferred over here. It is deferred. So you will always see this being tallying. But that is why it is called deferred, because you are deferring your tax expense. 1,36,000 you would have paid over here, but your payment was, see, now it impacts over here in this slide. What if it was the other way around? What if it was in the P&L statement it was double declining and here it was straight line? It would have been the other way around. First you have got this benefit, you must have paid taxes, and then in the next year you would have got rebate for that. And this net off will get paid off. So you have to pay this much of tax. But that depends on the position where the tax liability arises. So in the 5 years you pay same only. Taxes paid are both same. Here also it will be same. Also it will be same. 1,20,000 is what you pay. Okay. Okay, this is the tax liability. 6 lakh you paid. Here also it paid 6 lakh. But you see the difference? Now, which is better, a liability or an asset? Paying asset is better. I mean, having deferred tax asset is better or deferred tax liability is better. Now, from an valuation point of view. Now, what is better? See, if you can save, let's say these amounts are in crores, 60,000 crores you save as of now. Because of just, why? Because of just accounting changes. Nothing has happened to your business. Nothing has happened to your business. Now this helps, now this liabilities helps you pay off your short-term loans. Helps you pay off your short-term loans. Okay. Fine. That is what this is. But you have to be sure that in the future year, this you have to pay. That you should have that much of cash with you. That to pay. Okay. Now this is one way, one of the most important way, or you can say one of the most useful method used, because depreciation is there in every country, every company, depreciation will be there, and this clause are used in accounting. This clause are using accounting to fund your working capital needs. Okay, fine. So the deferred tax asset, deferred tax. Now, one more thing can happen. For sales, you have got 10 lakhs, but what if you didn't receive the 2 lakhs? What if you didn't receive the 2 lakhs? What do you create? A deferred tax assets or deferred tax liability? The first year only will say, okay, we'll take depreciation same. Okay, let's take it depreciation same. I will do it the other way around. Okay, we'll keep the depreciation same. Here, on accrual basis, I received 10 lakhs. But on the PA, on the tax reporting statement, cash received is your income. Cash not received is not your income. It will come in the future year. But now this year your sales was only 8 lakhs. What will it create? Deferred tax assets or deferred tax liability? What will it create? Deferred tax assets or deferred tax liabilities? What will it create? See, now here my income is low. If my income is low, my tax paid will be low. Again, receivable there in every company. My tax paid will be low. And my tax paid will be low. I will create again a deferred tax liability. Now this 60,000 can be directly also found. This is the way I've told you. This is how it comes. But if you are good enough in maths, it is what the difference. 10 lakhs, 2 lakhs. 2 lakhs was the difference. 2 lakhs into straight away the tax rate. That is your 60,000 is your difference. Okay, 60,000 is your difference. Now, there was one more thing. In there are tax bonds in India, and some tax bond interest are tax free. If you know, interest are tax free for the tax free bonds. Let's say this company has invested in that tax free bonds. Okay, this company has invested in the tax free bond, and they got, let's say, 10,000 as an income. See, if they get 10,000 income on the P&L part, it is an income. It's an income, so you have to pay taxes. You have to pay taxes. So here you pay how much, and income increase, so your tax base will also increase. Your income increase, your tax will also increase, right? But on the P&L statement, they say that no. On the tax reporting statement, they say that no, this is not taxable. This income is not taxable. Then what is created? What is created? See, because income is income. For a company, income is income. So because on financial reporting purpose, you will report this as income and you will take a tax benefit. You will charge a tax on it. But on the tax reporting, there is no income. Now what? Now what is created? Again, a liability is created because you pay 1,23,000 and here you pay only 1,20,000. And straight away again 10,000 into 30%. That is 3,000 is the deferred tax liability is created. But guys, now how will it set off? Depreciation to be told that okay, depreciation will decrease at some point in time, so tax will increase. That will set off. What about this? What about this? Will it set off? Will this set off? Because every year you will get an income and you will not charge over here. And never, because it is a tax benefit that the government has given to you. So now what? How will the DTL get offsetted? Year to week, so it get offsetted at the tax paid. Yeah, how will it get offsetted? Now these are called permanent differences. These are called permanent differences. Permanent differences. There, the depreciation was an depreciation receivables were all temporary differences. This is a permanent differences. Means it will never be set off. Means you actually got a rebate. Can I say that? You actually got a 3,000 rupees rebate from the government. Though it is a liability for you, it was a liability, but then you understand, okay, government is never gonna ask me this amount to pay them back. Now, whenever a permanent difference is created in as a DTL, it is said to be directly reflected in equity. Now it is your part of sources of funds reflected in equity. It gets reflected in equity because you know that this is the additional cash you earn. Can I say there is one more source of funds for you? Not paying tax is one more source of fund. Permanent differences created in DTL is always reflected in the total equity, in your equity. It's not in the share capital, but in the other equity or reserves and surplus. Okay, it gets reflected. Now 3,000 is your actually your cash inflow that you actually have to pay, but government didn't tell you to pay. That permanent difference reflected in equity. Okay. And one more concept after that. What about, can a permanent difference happen in DTA? Means you have paid tax in advance. Now government says that we will not set off. The government says we will not set off. Can this happen? Means you have paid tax in advance. Like this is like your TDS. You pay in advance, and since your tax liabilities was not that much, you refund it. You claim a refund. Now over here, this is like claiming refund only. DTA is like claiming refund. Now you know what happens. Remove this difference. What happens? This companies usually take a lot of expenses under their books. Some might not be related to business. Some might not be related to business, or income tax feels that this is not related to business. So what they do that, the other expenses, let's say you take another expense of 50,000. You say that it was a 75,000 rupees expense, but the income tax guy only allow 50,000. The income tax guy only allow 50,000. Say that this expense cannot be refunded, back. Now what happens? You paid 1,20,000 as a tax, and here your tax liabilities were actually 1,12,000 only. You had paid an additional tax of 1,20,000. You have paid 7,500. Now it is said to be your permanent difference. Now this permanent difference can never be never take a refund of it. Now this paid is gone. Now this paid 7,500 is an expense, considered as an expense. And this what happens? They actually reduces your previously occurred DTA. Previously, if there was a DTA, no, previous if there was DTA, it reduces your DTA. It reduces your DTA. That difference is reflected in something called a valuation reserve. Now this is not there, it's a part of CFA topic, but it's reflected in valuation reserves, which that 7,500 will be reflected in the valuation reserve. And let us say if you had a deferred tax assets of 10,000, that valuation reserve actually reduces your DTA. Now happens your DTA will be now you can only claim benefits worth rupees 2,500 because the valuation allowance has actually decreased your DTA. You cannot take the set off of that amount. So my main purpose over here was to tell you guys that how is a deferred tax liabilities and deferred tax assets created. I hope now it is clear. If any doubts you can ask. If any doubts you can ask. Now we can look at the models. We can look at the go to the model. Any doubts? Anyone can raise their hand. I can unmute you. Any doubts? We can ask. You can ask, and I will tell you how it impacts my valuation. How it impacts my valuation. I will just let you know. I have a model which is created. I have my DCF valuation over here. According to my assumptions, it is according to my analysis, my valuation is around. I have an index. Change it to yes. Okay, I change my valuation. 61% is my upside. 61% is my upside. 434 is my upside. Okay, my intrinsic value for the stock. Okay, now I just go and change my deferred tax liabilities. What will happen if I change my deferred tax liabilities? I increase my liabilities. Okay, I increase my deferred tax liabilities. It was 271. Sorry, deferred tax liabilities. Deferred tax liability. It was 486. Let me do it to 600. Okay. Now you see a difference of 114. See a difference. Now my balance sheet is not telling. My balance sheet is not telling. Now what happened? Now I will go to my cash flows and change it. Change in other current assets, non-current assets. Liabilities, provisions is one type of provision. 24. First 434. Okay, I just change it. It will not impact that much, but let us say if this amount was big amount. 6 lakhs, it becomes 6,000. See what happens to my valuation. Increase 434, right? Increase. Increase, right? If you have now this model is what I've made. This is what I teach, financial modeling. This is all things are linked to each other. All things balance sheet. You make one change in the balance sheet, your entire balance sheet changes. Okay, this is what I have. This is what I have made. Okay. This is what I teach the modeling. Now, this why I told you, because many of the students who have done modeling don't understand this impact. That how is that liabilities created? If you see a statement properly over here, its liabilities are increasing. Its liabilities are increasing. 378 became 486. Now it is said to be a good sign. It is said to be a good sign that your liabilities are increasing, because you are doing business, and you are doing business means what? You have to pay taxes, right? You have to pay taxes, but you are paying lower as of now because you are deferring your expenses. Now, the way you defer it, the more you defer, the more it helps. And if your asset starts increasing, if your asset starts increasing, means you are actually paying off your taxes. Means actually paying off your taxes early. Now what? Good or bad if you pay your taxes early from a company's perspective? Then everyone knew what happened in COVID. And before COVID, only this company had an issue. You see, Hero, this is Hero. You see, these auto companies have this issue, had this issue of not, the business was low at that time. So that tax benefit, they were not able to generate taxes. No taxes means no growth. If you see from the macroeconomic perspective, you must have seen GST collection is higher this year. If you have seen, if you read newspapers, GST collection is higher this year. Means what? Company has actually, sales have actually increased. Okay. So this is what goes into analysis, and this is what are things which are asked on interviews. Majority of the things. That is why this models, making models, having valuation is so much important. If you don't understand this, it will create a lot of problems for you. So that's why I had developed that course of starting from tomorrow, that equity research analyst. How to be what does an analyst do on a day-to-day life? How to analyze a balance sheet. The ratios also that we have learned are of no use. If I give you one example, do you know asset turnover ratio? Everyone know asset turnover ratio? If you don't know, asset turnover is asset turnover. How much sales you do from if you invest 1 rupee in an asset. And if I say asset turnover is 10 times, means if I give you 1 rupee, if you invest 1 rupee in assets, you can do a sales of 10 times. You can do a sales of 10 times. That is asset turnover. Now what we do, that what is the formula for asset turnover? Is your revenue, as Tanisha has said, it is like your sales or revenue divided by total assets. This we say total assets. Okay. Now let's go to a balance sheet. Now what I said, just remember what I said. If I give you 1 rupees, you can do a sales of 10 rupees. It means if you invest 1 rupee, you can do a sales of 10 rupees. That is what asset turnover is. It means directly related to sales. I have a balance sheet over here. Total assets is this. Okay. Tell me, how is my financial investments, which is around 5,000 crores. Financial investment means short-term investment, means stocks, equity, bonds of different companies. How will this relate or maybe help me to generate sales? How can this help me generate sales? Can this help me generate sales? Maybe we just now learn our income tax assets, deferred tax assets. How are those assets related to sales? Are those related to sales? No. But still because we have learned, in our schools and colleges that asset turnover is what? Sales by total revenue. So we do it and we get all dangerous answers. See, if you see, Maruti has 40,000 crores of investments. Maruti has 40,000 crores of investments in liquid funds. How are those related to sales? How are those? See, this is not a small amount. Out of the total asset, 20,000, 6,000 is around investment. So 20% is only about investment. How is this related to sales? Okay, this we can assume. All intangible assets are related to sales. What about this? What about receivables? What about receivables? Are those directly related to sales? Cash which is lying in your bank. Because we have learned, because it is there. These formulas are tweaked. When you go to interviews and all, these are the questions which are asked. If you are, these are the questions they give you balance and P&L. If you just do it and solve it this way, you have no use. They will say it is wrong. If I was a interviewer, I will say this guy doesn't know analysis, this guy doesn't know finance. He has just mucked up formulas and come. It is what? It is the net asset, or maybe the fixed assets turnover is important. The total asset is not important over here because that is not related to sales. And that formula was developed because many years back, all this wasn't a part of your asset. Your asset were already considered your car or your manufacturing plant. These were the only assets which were considered. Now, because the industry has evolved, all these things came. Okay, businesses have evolved. Asset turnover, you do for asset turnover for IT companies. You do for asset turnover for IT companies. What is the asset of IT company? What is the asset for TCS? What is the asset for TCS? Software. They don't sell softwares. Majorly, it might be some part of it. Then major part is services, Tata consultancy services. How do they earn revenue? By employees. By the employees, right? So employees are the assets, and that is not reflected on your asset. So what do? You do revenue by asset, and then you say, sir, Tata, and you compare. You also have seen students comparing total turnover, total asset turnover of Infosys and TCS, saying that okay, TCS is better than Infosys based on total asset turnover. Does that even metric is used in this industry? Asset turnover. So when you follow different industries, when you make models, if you make an IT model and show in the ratio that is total asset turnover you have taken, I will say that better, don't do analysis. I will keep you for reporting purpose. Okay, this guy reports very good. It's better you report only. You don't analyze things. So analyst, investment banker, whatever, it is about analyzing and knowing things. So these all things are not written in books. I have learned this from my experience in my past, talking with industry experts. I have to talk with the global CIO of HSBC, global CIO. So he was a big man. We used to interact with him directly. He used to ask us, what is your thoughts on, and then he used to tell all those things. Okay, this is nothing that you have to not look at. That doesn't make sense to look at asset turnover for an IT industry. Okay. Fine. So this was all for the class. Next time, next class, we will talk about this. This one more item, right of use assets, which has been introduced from 2020 only. FY18, FY19, there was no entries, but suddenly in FY20, you see an entry. Right of use of assets and right of use of your lease liabilities. You see, it started from 20 only. Now again, why? What is this? How will it impact your cash position? No one knows. No one even projected in their annual report or balance sheet. Even if you don't project, you should know its implications. Projections will be difficult, but implications you should know. Okay. Okay. Any doubts you can ask? Anything personal or anything about finance and all. I can help you. You guys are just my connections on LinkedIn. I keep on sharing, keep on sharing job openings. I also refer few of my students. There are few of my students attending this lecture as well. I have referred them. Refer them to institutional broking. They make models. They have made reports, and that experience actually helps them. So you can also, if you think that you have that knowledge, you can just let me know. I can help you get a job. Or if you have no idea, you can join my course. You can take you can ask those people also who have joined the course previously, how helpful was them. If not from a job perspective, from a knowledge perspective, because that knowledge can help you enter into equity research. What happened with me? I was an analyst. Sorry, I was working as an advisor. I told you in the first. It was a relationship manager job. Though my profile was an equity advisor, but my job was to go and open equity accounts or pitch the stock to them to buy so that my company will earn brokerage. 35,000 was my salary at that time in hand. 35 was my salary in hand, and I used to do a sales job back in 2014, 15. But I knew that this is what I don't want to do, and I want to be an analyst because this was a useless job to do. Though I was earning 30-40,000, at that time it was still a big amount. My parents were happy. You are getting 40,000. We never get 30-40,000. They were happy. Somehow I knew that what I was doing there every day, going to the office and pitching stuff. Sales wasn't in my blood, or I didn't wanted to do sales job. But now, even after clearing CFA level 1, I wasn't able to get a job. Every time they were saying, no, if you are into sales, why you want to come into research? You don't have experience in research. On what basis we will take you? On what basis will we give you the salary? Now it made me frustrated that what should I do? And that time CFA, 10 years back, CFA, no one knew what was CFA also. People were when I used to go to study, 99% of the people were doing CA. And I used to go to a library, only 1% of them, the students were doing CFA. Out of 100 people, only 1% was doing CFA. So it was that kind of scenario at that time. But even after clearing it, even after clearing that exam, I wasn't getting a job. I was an MBA, I was a BCom guy, finance guy, CFA, still no job. Then I went into an internship, just like this has started. I just went into an internship, and that internship actually was an offline interview. That time there was no online thing. It was offline. I used to travel almost 20 kilometers from my place. Sorry, 40 kilometers from my place where I stay. 40 kilometers up and down every day. And he said that I am not going to pay you. I am not going to pay you any single amount. You have to, I have taken you, you will come over here. So I have, given you my knowledge. That is the only thing he said. And I said, sir, it's okay. I had 35,000 salary with bonus 40,000. I left that job in minutes. I didn't even take the relieving letter. It was like 31st, 27th March. He told, I took the interview. It was Saturday, Sunday. He said 31st March, I want you in my office, or else I'm not taking you because I have few others also candidates waiting. I left all my 40,000 rupees job, and to go there, my traveling cost only there was 4-5,000 for a month. 3-4 months, my costing was only 4-5,000, though I spent just on traveling. But I told that, okay, 3-4 months I will spend on learning something. I'll say, okay, I didn't have a job, I'm a jobless for next 3-4 months. And I went with that mindset that even if I don't get the job, I will sit there for him 6 months and learn from him till I don't say that, I have an experience in equity research. Within 2 months, I got an institutional broking offer. Within 2 months of the internship. And I applied for that job. That job they required 3 to 5 years of experience. They are clearly mentioned in the job portal that they want 3 to 5 years of experience. So I just went and applied. I said, okay, fine, let us see if they get back. And somehow they got back to me. They said that, okay, we are looking at for candidates. If you are okay, the budget was low, but it was fine. They have to look at the candidates. And since I was a fresher, so obviously I cannot ask in the higher salary. So whatever salary they gave, I think they gave me around 30,000 only. 35,000 was there, so they gave me 30,000. Even I came in at a discount, can say. I came at a salary cut from my sales job. And then the salary was just 6 months after that in my job profile. My salary just multiplied. I'm not saying hike, it multiplied. It multiplied. How many months I spent? 3 to 4 months and 6 months on job. 9 months I just spent, and that changed my life totally. Now here I am at the age of 30. I'm taking classes. I have been around in the industry. I have met so many people. Yeah, though I have worked 15 hours a day. When I was in Brazil, I used to work almost 15, 18 hours a day. But yeah, it has somehow helped me, to gain more knowledge. Now I am here with my own advisory, or maybe you can say my own tutoring. I tell students how to learn. I have a professor in Wellingers. If you know, Wellingers in Mumbai is one of the best colleges for MBA. I teach them financial modeling. They require visiting faculties. 2 universities. I also travel to Hyderabad. Those people call me to teach. The experience what I share is much more important. In Hyderabad, when I go, I didn't knew that Hyderabad was a city, which is that forward in finance. I thought Hyderabad is just IT, but people over there get 10 lakhs rupees salary as a fresher, BCom or a CA inter or MBA. Normal college, Hyderabad MBA, you know how they are. Hyderabad MBA colleges, where they are not even Hyderabad, they come from Andhra Pradesh. MBA finance, but they have got 10 lakh rupees salary into this field. Not into research, but related to research, related to investment banks. Why? Because they have this kind of knowledge with them. At least technical rounds clearing is important. Whatever questions they ask, you should try to answer it in a very sophisticated way. And always, it is not to be defense. In absence of information, liability is always back. Okay. So I've created, if you are all my LinkedIn followers, I know it's that I have created the code. It is starting from tomorrow. If you guys are interested, I can let you in for one of the sessions. You can let me know. You have all are there on WhatsApp group, I guess. So you can let me know. I can give you also the recordings of past classes if you want. I can share the recordings of past classes. How helpful was it for you? You can just know. Okay. Okay. Fine, guys. So good interacting with you. Thanks for coming. Next time, next also I will have a session again for right of use assets and right of lease liabilities. How it is calculated. The way it is calculated can help you if you are giving CFA. This was one of the topics in CFA. If you read any time of this topic, income taxes, you will understand that how difficult is it for reading. I try to make it simple. Now you can, I will share the recording of this. Do ping me on LinkedIn or on the WhatsApp group. I will share the recording. Given on YouTube, you can go and watch anytime you want. Fine. And guys, thank you. Thank you so much. If anyone wants to ask anything, can raise their hand. I can unmute. Oh, okay, I have opened it. You can unmute yourself if you want. You can go ahead and talk. No, Tanisha, I don't teach accounting. I am into more about finance. Anyone? Any doubts? To ask anything? I'm opening the floor for questions and answers. You can always ask me a question.
Hi, sir. This is Rahul here
Hi, Rahul.
from Bangalore. So, I am currently working with JP Morgan, but I'm into asset management operations. I would like to transition to as an equity analyst or into the client and product teams. But from what I've seen within my organization, it's very difficult. They ask me to do CFA, clear it, and then apply for internal job postings with them.
Right, right. That is an issue that JP Morgan and all. So what happens? I have one more student. He is in Goldman Sachs, Bangalore only. He's in Goldman Sachs. So what happened with him is that he was into market research. He was not into equity research.
Okay.
He was MBA finance. Okay, he was an MBA finance. Are you an MBA?
No, I'm just a BCom grad.
Okay. So what happens? The CFA, if you when you register, if you know few things. It's not about
Yeah.
always clearing. It is about knowing few things. I don't say only CFA, but you read books and all. You make models. You make financial models. You know that you tell them that I know basic valuation. I have made uh, I have made models. I have done research. I have written research reports, not to JP Morgan, but some, let's say, some other organization. No,
Okay.
they will at least try saying that okay, this guy has done something, and you are already
Mm.
into that way, already into that accounting part.
Yeah.
So accounts obviously you will be knowing. It's just
Yeah.
a transition into finance will help you. And that is why
Yeah.
I came up with this courses that for working professional as well. I've kept this at 9:30 to 11 in the evening. So what that
Mm.
even if you tell some other, if you write in your CV that you have done this, you have written reports, you have made models, the
Yeah.
HR actually wants you to at least have an interview with you because you know that she knows that you are from JP Morgan and you know the culture of MNC.
Okay.
So this is an additional benefit for those who are working in MNC. Additional benefit. I have seen that in a transition. Goldman Sachs he directly came into equity research, though other company, but he was hired just because he was having that modeling knowledge.
Okay. Cool.
Okay,
Got it.
it's all about having knowledge, and you can always register for it and try giving it, learn it, learn it when in your free time.
Sure.
Okay.
It would be better if I would take up courses then and then start applying, right?
Uh-huh. It always
Mm.
because see, I'm an HR. Let's say you are an HR.
Mm.
I'm into asset management. Okay. I send you
Mm.
my CV. You are finding someone with an experience in equity research. What will you do?
Yeah. Got it.
What will you do?
Obviously, select
What will you
another
do?
select
Think
the
from an
candidate.
think from an
Select,
HR perspective. You will reject. You will reject
yeah.
me.
Yeah. Yeah.
So if you right now, if you let's say I send you one CV, okay, let's say
Yeah.
I'm working, but I will say,
Yeah.
okay, I've done this now course. The first page only I will write this in the mail body. I have done this course, I've made some valuation model, I have done some research reports. I will send all my research reports to you and all. Now what happens whenever there's an opening, now you will at least think, okay, this guy has sent me something. Let me ask him whether he can able to
Mm.
join. Let me ask him. But if you just send me, if I just send you a CV, now it is quite
Mm.
obvious. Even I get hundreds of CV. I don't even look at. I don't even open the CV
Okay.
because I know there's nothing
Yeah.
to look at.
Yes. Yes. Yes.
Right.
Got it. Thank you so much, sir.
Um, Tanisha, could you please let me know how can I get into IP domain? I'm into equity partners and commercial lending. Tanisha, the same answer, what Rahul asked. Same answer. You need to have some knowledge. You need to show them that you have worked on it, and not only for few days, continuously you have worked. That is where the recognition comes. If you're working in big organizations, better, to have some knowledge of some other companies as well, because that MNC culture helps. Your CVs will be highlighted, but what about the knowledge? Now, CFA is the only one thing which is, and that is very difficult. That is not easy to do with job. But if you want to transition, you have to do something else. You have to find something. You have to make models and all. So that is the reason that that is where you have to be good at it. Because knowledge is important. Degrees, see, I am also not a CFA. I am not, I only cleared level 1. I did MBA from normal college. How did I end up into CRISIL? How did I end up? You think MBA is necessary, this is necessary, etc. Knowledge is important. It is just the start that is required. I got that start from a small organization. Again, I was working with BNP Paribas. It was a big company and an equity advisor. But somehow then, I went into much bigger organization. Though I went after 5 years, but I went after 5 years, but it was much, much bigger than BNP and the profile was much better. So this is what I've created. I have also shared it on LinkedIn. You can have a look at it. This is what will help you, to gather data and analyze. This is what analysts do. Analyze different companies, create financial models from scratch, day-to-day tracking of the companies, making valuation models, learn some Excel skills, make an initiating report. And I've kept this session specifically 9 to 11 in the evening, so that now even working professionals can add something to their CV. rather than just sending it without doing, without having any knowledge. Okay. Anything? Anyone else?
One more thing, sir.
Yeah.
So, is there any, are there any tech skills that you recommend to sort of concentrate on for, if there's a requirement for these type of roles?
Nowadays, tech skill, if you say advanced Excel, macros and all,
Yeah.
or it can be Power BI. Now, okay, Power BI and Tableau are okay. Main is
Okay.
Python now. Python is data analytics.
Yeah.
Python is also good if you want to improve on your tech skills.
Okay.
Just knowledge about Python. I'm not saying you want to be a coder and that. Knowledge about Python.
Got it. Thank you.
But Excel is must. Excel is must.
Yeah.
Advanced Excel. That's it.
Thank you, sir.
Thank you, Tanisha. Tanisha was there in one of my classes in Tanisha, where were you? I think equivalent, right? Equivalent. You were there. These skills are important in finance. Wherever you go, IB fields is there only. These skills are very important. Yeah. Okay, guys. Anything else before we sign off? Thank you. Thank you, guys. Bye bye. Bye bye. See you. I will again post you with some other workshops like this. Okay. Thanks. Bye bye. See ya.